Hey, it's Mike with PriceActionTradingSystem.com, and this is Monday. It's August the 26th. It was a really slow trading day until late this afternoon. All the movement's been this afternoon so far. This was a great move. I'll be honest, I didn't take this trade. I was done by now. I gave up with this, when we got into this stuff right here. I wish I'd have hung around a little bit longer, but about lunchtime I just gave up on all this, and I missed all this. So and other than that, there weren't but a few trades today. Um, if you were here, you might have, it wasn't really even worth trading out of this because there's too much chance it's going to come out and fail. You might have gone short here. It would have worked if you wanted to take that trade, but again, there's so much overlap. But it could have easily just pulled back and tested this. So the first trade I saw I really liked here. There's two legs back to this possible trend line. If you just draw your trend line off these closes up through there like that, you can see that. It didn't matter how you drew it as long as you got it across the closes or across the bottoms. It didn't matter. I adjusted mine a little later in the day, I think. Originally I had it right up through here. I think I originally had it like this right here, but you still get the same thing. Doesn't really matter, and that might even, the way I originally had it might have even been right. Let's just look at that and see. But later I flattened it out. Yeah, looking at that, that might even be right, and that gives you a bigger clue as to the turn here, because you get a little break here and then you get two legs up, but when you start missing the upper side and can't get to it, that's a strong clue. Only thing is that you don't really, well, I guess if you had a break here, you had your two legs up. So that's another good example that it doesn't really matter. Here, you didn't get a break till here and you had two legs up, but it was just two retests of the underside, and when you couldn't get there and you had this trend line, it turns back down and you got to go with it. So that's just a great example of showing you don't have to get it exactly right. You just got to be close, and you got to have it in the right area, and there's multiple ways to get to the same place in most cases. So, but that's how I ended up changing mine too as the day went on, and that tended to look better. But maybe I should have left the other one alone, because it made this entry look a little better right here to me. But this is still a two-legged pull back to the EMA. But let's talk about the trades. This is just a two-legged correction right back to the trend line. It bounces. I don't like this signal bar. I get so many questions about the signal bar. I want to talk about this for a minute. Let me make this a little bigger so people can see it. Let's get this out of the way. Notice that this signal bar is bearish right here. So going long above that signal bar is a little tricky, because what you want is a trend bar in your direction. We're wanting to go long, so look at this green bar. That's a trend bar in our direction that closes near its high. So even though this is your signal bar, we want to wait on this bar. When it closes, a break above it, you could drop a limit order in there, and you could have dropped this all the way down to 3 ticks into this bar and got filled, and then it turns and goes straight up. I usually drop mine back to the closes. So there's your close. I dropped mine back to right there. I got filled right there. It went 1, 2, 3 more ticks against me, but my stop's going to be down here 1 or 2 ticks below this. And you got to use a limit order that at least gets you within your 2-point rule, that we don't want to give more than 2 points. So hopefully that makes sense. This is a trend bar. We're wanting to go long, so we want a green bar. If I'm wanting to go short, I want a red bar. I don't want to be going long above a ugly bar like this if I'm going long, and I don't want to be going short below a bar that looks like this or this. Even though it might work. In this case, you want to wait on this bar and then go short below it, or wait on the break below it to trigger it. This high is still your signal, your high point in the move. This is still your signal bar, but and it's a second entry short. Notice first entry, second entry. We really, again, I didn't like this short, but I'm just going over this for examples. But anyway, hopefully you understand that. And if you didn't enter there, you got a second chance to enter here on a second entry long. It was a second entry from either direction. Look at this. You're coming down, your first entry, your pullback in your second entry was a break right there. But even if you start from here, your first entry or your first leg up, pullback, second entry. And there's no break lower here, but that's still a move up, a move down, and a move back up, and a break above each of those bars. That's good enough. So hopefully that makes sense to you. So there was one entry there. If you missed that one, there was another one right there, or you could have added on if you wanted to. And then look, boom, it's a quick, fast move up. And then you get a little double top and a move down. And then guess what? You bounce right off that line again. We didn't quite get to the line there. It's close enough. But again, this is a very bearish bar. Look, it closed on its very low, so you don't want to go long above that, because guess what happens? It pulls back. So wait on this bar, and if you get a break, then drop your limit order and see it pull back into there, and you get a chance to go long. Another easy scalp. And that's how I do it. And then notice this is a two-legged pull back to the EMA. Here's your new high. Your count 0. You pull back. There's your first break higher. There's your first entry. You're pulling back again. You start higher. There's your second break. A nice second entry. And that's a nice reversal bar that closes on its very high. Look, price is traded way down here. And before that bar closed, it closed on its very high. And I guarantee you they trapped a lot of shorts. The counter trend traders got trapped here. And then boom, it's off to the races up again. And I didn't like any more entries in here. There's too much overlap right here. Look at all that overlap, and look what happens when it breaks higher. It breaks lower, and it's, you just get trapped out both sides, and then it turns into a little breakout pullback short. But we're still looking for longs at this point. You might have considered going long here, but again, I don't like that bar right there, and it really was uncertain if this was your trend line at that point. You might have even had it originally here. I think I originally had it right across there, maybe a little steeper or a little flatter than that. But after we got the turn up here, I knew, I just copied that line and pulled it down, and it fits perfect. You can see that. And but this is two legs up. It tests this. It tries to go higher here twice. I was a little hesitant. You didn't want to go long out of that. Look how flat that is and all that overlap. So let them get somebody trapped, and they get people trapped right here. And guess what? That's a second entry short too. There's your first move up, first entry. Actually, it's really not a second entry based on the ticks lower, but it's close enough for a second entry. You got one leg up, and there's two legs, a couple of legs in that first leg, and then you got a little correction here and then another leg up. So that's really a two-legged correction. And this bar is fairly bearish. It didn't quite close on its low. One like that, I like to use a limit order. You got to be careful with those, because if you were too conservative and put it too far back, you didn't get filled. And look at that move you missed. Usually when they're up here like this, I'll drop it right at the high or maybe one tick in. And if I really like the setup and I miss it, I might drop my limit order. I may drag it down right to where the stop would have been, but I usually don't go much lower than that, because it's critical that you don't give up any extra ticks up here, because it may only go just enough to get a scalp and then bounce. But notice where it bounces right off this possible trend line. We get a little short trap. So it looked like a short trap. It's a second entry long, but this is why we don't counter trend trade. Now we're only looking for shorts, because if you went long there, you got a chance to get out, but you probably would have gotten trapped in this and probably lost a tick or two. And then boom, you finally get to, this is where you're looking for the setup, and boom, you go short right there. Again, it's kind of a doji, but it's a nice second entry short. It's two-legged move back to the EMA. You got the trend line at your back. You just can't ignore that. And you don't know that it's going to do this, but boy, I wish I'd have still been trading, because I would have liked to caught that. And then you got a second entry short here. You got one leg, so you're probably going to get a measured leg. And I'll just show you. I hadn't measured it, but I'm guessing it's real close, if not exact. I didn't quite make a measured leg, and then now it's rallying going the other way. But that's what I like. That's how you do it. But let me show you something I think that's important here, because I get this more than anything. People enter all up in here, and what you're waiting on. we know where we want our trades to set up, and we're only interested in trading when our prices come there and we get a setup there. Any other time, just sit and wait. You got to be patient. We don't chase trades. We sit and wait on our trades to come to us. And let me show you. Once you know you got your channel here, and this is an up channel. Look how steep that EMA is. Look how it's constantly making higher highs and higher lows. So we're only interested in going long, and the only place we're interested in going long is two-legged pullbacks to the EMA or trend line, and preferably both, like right here where you catch them both. And that's where we're looking for a setup. We're not looking for a setup anywhere else but those places. And this is a trend, so we're looking to go long at corrections that pull back to the EMA or the trend line or both. And that's it. Nothing else. And then once we start trending down, we're waiting on sales only that pull back to this trend line, and that's it. Or that or the EMA, and that's it. Nothing else. So entering here is just futile. You're just asking for trouble, because what happens is, look, you can see it. We bounce off the lows, we go to the highs. We correct back to the lows, we go to the highs. We correct back to the lows, we go to the highs. But look, the markets, more people are catching on that the trend's up, and now we can't even get back to the trend line. We're only getting back to the EMA. But then suddenly there's not enough buying left anymore, and boom, we're going the other way. And look what happens. It goes from high to low to high to low until you finally take off down here. And that's what the market does. So when we're going up, we're looking for buys off the EMA and the trend line, and when it's going down, we're looking for sales off the EMA and the trend line. And when it's both like that, that's even better. Because guess what? You got the EMA acting as resistance, you got the trend line acting as resistance, and they're both proven, and that's a good setup. Same thing here. Notice right here, when it came back here, it was setting up a buy right here, but look, it never triggered. Notice how nothing ever broke lower, and then we broke the trend line. Well, now you got a break of the trend line. We're still looking for a possible retest. So you might have gone long there, and if you did, it would have worked. But you didn't. But I didn't like this long, because now you got these swing highs, and we've also couldn't go much. You don't want to go long out of this most of all, but look how flat that EMA is, all the overlapping bars. No reason to go long there, because there's too much chance it's going to snap back, and then you could go long if it turned up again. But it didn't, and you got a chance to go short. And notice this broke higher here first. If it would have turned down and broke lower below that bar in the same move, I would have went short right there. Even though that's not a good signal bar, the fact that it could go out, it went out one side and then goes out the other with the trend, that's usually a pretty good sign, and that's the way I like to see it. Otherwise, I'll wait for this bar to close and drop a limit order or a stop order or something in there. And it didn't matter how you did it that time. And it generally won't. Notice where all your best moves come from. Your very best moves are coming off of this trend line or the EMA. Same thing going down there. The best moves are coming off the trend line. And look at that. And where did it come from? Right off the trend line in the EMA. And that's the way it generally will work. That's where all the best trades set up. So forget the stuff in the middle and stay and look to buy pullbacks to strong. Really, we're looking for pullbacks to strong support and resistance. Support when we're buying, resistance when we're selling. But in a trend, you don't have that everybody recognizes the like right here. That's not hard to see that there's strong support right there. Look how many times prices tested that little area and couldn't get through it. That's obviously strong support. It doesn't take a rocket scientist to see that right there. So most everybody understands that, but I think the part that people miss is that, first, don't counter trend trade these upward channels or downward channels. When they're down, you're only selling, and when they're up, and guess what? They do work both directions, but guess what? They fail a lot in the other direction. Look what happened right here. You would have got trapped, and here you would have got trapped and it went higher. So don't counter trend trade. Only trade with a trend when you got a strong trend or a channel, and then the EMA's up or the EMA's down. If it's down, we're selling. If it's up, we're buying. Nothing else. And the only place we're interested in buying is corrections that pull back to the EMA and the trend line. And generally you're waiting on the trend line, because these can be tricky right here too. Because we're coming off the upper side, but we didn't get back to the lower side. So there's a chance it could tick up here and trap you and then come back down. But this was a nice little trend, and the fact is that's a second entry long on a beautiful reversal bar. But there's also a little support. This is a little bit of a range, and we had a failed break lower, and the trend is up. So we know that's going to trap a lot of short, so we want to go long right there. And you can see that. And guess what usually happens out of ranges? You usually fell out one side and then go up and fell out the other. And that's what happened here. We broke out the bottom, failed, went up the top and failed, came back, made a little higher low. That's a breakout pullback long. So you could have even gone long right there. It does fit the rules, but I don't like that setup because of all that overlap. There's too big a chance it can pull back and turn down right there. So I hope all that makes sense to you. But forget the stuff in the middle of all that and forget counter trend trading. If you'll just stick to those rules, you will instantly improve your trading dramatically just by not counter trend trading and only looking to buy strong support and sell strong resistance and staying with the trend. And this is kind of overall, I would call this probably a range type day. Although this kind of negated it because we broke so much lower. But notice these highs over here earlier. Let's just put a line across there and you can see it. So this was looking a lot like kind of like a trading range day at first. And notice this high, and we tested it and we couldn't really go much higher. And then we turned down and it looked like we were on bounce off the lows, and they trapped everybody and boom, down it went. And that would have been tempted really to go long right there because you've really got two legs down right there. There's probably one leg. And then if you drag this down, you overshot the second leg a little bit. And so it's kind of like a two-legged move. It's an overshoot. It would have been tempted. So I guarantee they trapped a lot of longs right here, and that's why it shot down for another shot down so strongly there, is they trapped a lot of people. I mean, that's a nice setup. It's a strong support, and there's a lot of people that'll buy this blindly across here, especially that far away from the EMA on a chance to get long there after maybe two bigger legs down. And that's what happened. They probably caught a lot of people off guard and took it on down, and then it comes right back to that area again. So but I hope that all makes sense to you. I'm going to wrap this thing up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.